Come Jimmy at Woodstock. Drive me around and go right forward. Shivers down my spinal cord. Oh, 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 oh. 'Cause you got me holding, holding. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word. 'Cause you got me holding, holding. Even if my jokes sound funny, my tongue tied up on it. And I don't need to speak a single word. 'Cause you got me holding, holding. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word. 'Cause you got me holding, holding. Even if my jokes sound funny, my tongue tied up on it. And I don't need to speak a single word. 'Cause you got me holding, holding. You made a mistake, underestimating what you've taken on. I'm out of the cage 'cause you opened the door. You're as innocent as gold. 'Cause if you're falling for me, just be one. 'Cause I don't think you're ready for it. I'm not the one to mess around. No, I don't think you're ready for it. Too many people done wrong. 'Cause I don't think you're ready for it. You best believe that time's up. I'm a murderer.
Right, lads, how's things? We're all up and running, I think. I don't think there's anything going too much amiss. Yeah, I think we're good to go. We've someone in anyway, so we're not streaming to no one. So whoever's out there, I hope you're well. I trust you'll enjoy yourself anyway. If you want to drop me a line in the chat just to say hello or whatever, since there's only the two of us here, sure, so be it. And yeah, look, we'll hop into it. So, where do we start? There's Dogecoin. I was doing a little bit of, I had a bit of a look at Dogecoin there yesterday and Friday, but I opened one little small position on it, mate. Very, very little, about 25.25%. Like on a return on a position, but nothing really, really major. Very, very small risk. Very, very, nothing worth talking about. So we'll start off with a little bit of Bitcoin. Bitcoin is looking scary, quite frankly. If I can, hold on, zoom this in a little bit. I hope this is coming up nicely on the display. Anyway, it should be. So yeah, basically, what we're looking at is Bitcoin. It's consolidating down around this 49 kind of. So like we have the 48 level here, we have 49 off of this zone, and then we have up around the 51 off of this. So we're fluctuating between 49 and 51. 50 running, it's kind of deviating about 50k as the mean. So we're just kind of channeling sideways. I just have the 50k mark there. Yeah, like moving average, the what you call it, what color is it? The 50 is starting to kind of come out of that leveling period, so it is starting to show a little bit of bullish, but it's still not enough. The 200 and the 100, as I have them here, they're still trending downwards. So overall, since the fall off on, was it Thursday, Friday, but Friday obviously with this one, but it has been downtrending over the last couple of, the last while, obviously, since Turkey did the big outlaw of Bitcoin. That's really when things started to take a turn for the worst, to be honest. So Bitcoin, I'm feeling a little bit indecisive. So like I was kind of feeling for this double bottom kind of starting to form here. What you call it, this double top was scaring me as well. So we have both things starting to kind of show. So if we just mark these a little bit stronger, so we have double top, so forming here, and we have double bottom forming. Actually, we can just go bang, bang. Can we not do a double select? No, we can't. So if we just take that, move it down, just for simplicity's sake. So we have this one, and we'll just go copy and paste that over here. So we can see that it is starting to, so double bottom, so it started by double topping, came back down, but it didn't break through. So we're okay. That double bottom isn't after holding true, but this double top isn't after holding true, but we're still looking at a possibility of a double bottom to send price. So just as a quick little analogy over here, for if you don't understand thoroughly what double tops and double bottoms, so if price, so we'll show the double, so we'll just set this to red just so it comes, so we just see it red for the first example. So for a double bottom, price comes down, it comes up, it comes down, and then it breaks back up again. So it makes it not that way, but it might, it might do something like this, right? That's the way a double bottom works. For a double top, we'll do the opposite. So we just change the color of it, just put it in green. So I should have drawn that one in red or in green, but this one, because price will be going up to double bottom, so price will rally, it will come back down, but it'll come back up to the same level, and that's when we're looking for the shorts. So if price reacts in this kind of location, you don't enter off it, because price could come back down to here to come back up. There's nothing to say that that can't happen, because in trading, if you're in any way versed with the markets, you will be able to identify this kind of a formation, which is a rise ascending triangle. So basically the triangle is ascending, so it's kind of pushing up the way. So basically what that's signifying is price came up, came back down, price came up but didn't quite get down. So remember in the trend analysis video before, we were talking about, so this is a high, and then if we copy and paste that, we have a higher low, and then copy and paste that, we get to a high. So it's a high, and then we make another so if we take that and we paste another one, so we take a higher low. So we go from a high to a higher high, or from a high to a higher low to a high. It's not a higher high because it didn't actually break above, so it just gets to a high to a higher low, which doesn't mean the uptrend is over, and then it breaks through because there's pressure. Hold on, sorry, I'll just mute this because it will just get annoying. So yeah, this ascending wedge kind of extending triangle thing before. So I'll just open a tab, I'll just do ascending and descending triangles. So just to give a good example of what I'm on about, this is a perfect example of what I'm on about. So we can see this here. And just make sure that this will actually pick it up, because I could have it set to only record the trading view. Actually, just yeah, it's showing. So what we can see is the exact formation that I'm showing: price coming up, hitting a level, coming back down, making a higher low, coming up, making a high, coming down, making a higher low, and it's slowly, it's not breaking any higher, but it's not breaking any lower. It's still continuing in a kind of an uptrend. It's not making new highs, but it is uptrending. So basically, price starts to build up pressure and pressure and pressure and pressure, and then it breaks out. So that's what an ascending or descending triangle. That's the formation that I'm on about there. But just as I was saying, this is the TradingView app. So this isn't actually on a browser. This is actually an application downloaded onto. You can't actually see down here, but if I go just TradingView, it's an app actually on the computer, which is, I think, is very, very, very handy. I thought it's something that TradingView is around a very, very long time, and it's something that I thought they should have done a very, very long time ago. So we'll just clean up this. That was, I think, quite a good little bit of information. So that's what we could be seeing. I know it's a kind of a sideways channel, so a mean reverting strategy would be good in this instance. So price comes up, made this, so price came down, but see, we could have marked these zones off of this level, so we could have predicted this one off of this level here, and then this one, so this retest here could have been predicted off of this, because price came up and marked down. So technically we started an uptrend here, but it just continued over as consolidation. If anyone sees my charts before, I have a consolidation, always mark them in orange. So like that, that's the way I would have always done them. But I'm kind of working with purples, SR flips. So like the green one here, I'm after kind of as part of my strategy. I have it written into my strategy. I have the little book here. It's covered in stuff at the moment. Just before the video, I just called all the stuff and fired it over to the side. But in that, I'm after, so these are low time frame SRs. So if I just go in here, template, I have I don't know if this has actually been covered, but there's green small time frame and SR for purple time frame. So our SR green is more for longer small time frames. And then like if I go onto my, like all these kind of this green zone, if we go onto a daily chart, we'll see different. See, like we won't see all the small time frame stuff that's on the chart. We'd only see the longer time frame stuff. So that's all I did was I just went into the settings on it, visibility, and you just turn off. Actually, that one is on all of them because I decided for a bad example. But these ones, if you go into the visibility settings, I have it only set from a 12-hour up to a daily chart, basically. So it'll show on all the charts above the 12-hour. So it'll show on the 12-hour. But if I go down to the 4-hour, that zone is actually going to be drawn differently. That's my own zone drawn for the 4-hour, but we'll see the ATH is on for all time frames. But see these ones, these are only determined to be on the smaller time frames. So from 1 hour to, or 1 minute to 60, so all my minute time frames, as well as 1 hour to 11. So I don't want to see all these kind of small time frame bits and pieces, because see, like it these are kind of drawn for the smaller time frames, so for more kind of a day trading type thing. So 4-hour would be a kind of a more semi swing trading type of a strategy. So I have all these bits of information written in on my different strategy books. So you can trade off the 15-minute with these kind of zones, and that's the way I have been for some of these. And just as I mentioned with the when I was talking about the mean reverting strategy, so my mean reverting strategy would basically mean the bearish engulfing candle here. So obviously price came up here, so this would have been the first peak of it. So you wouldn't necessarily have gotten in here if. So rejection. I'll give you a little bit of an insight. I had rejection off of the 51, so the 51,000. So we can just draw in a line here just to symbolize it. I'll color it in a different color. But we just, for the sake of it, we put it in, I don't know, bright white, just so it stands out on the chart in 4 pixels, full no contrast, and we just set it to be the 51, and we put it to 51 as well. Like that. So this, right, we had a rejection off of the 51, so it was obviously big resistance off the 51,000 line. So as we talked about before, support and resistance, so we can have support and resistance at key levels, and those key levels can be round numbers, and they typically are. Like if you're talking about Forex, they could be 150, 120, 110, 115, you know, that kind of way if you're looking at kind of euro dollar type pairs. Or you could have at 50 pips, so you could have 0.255 could be the round number, and you can see bits of reaction. So like obviously every 1,000 is a big reaction point. So like if we look at the highs here, we're looking at 50,500 there. So this level across the middle is the 50,500 line, right? So the 50,500 is around here. So if we just stick in a horizontal line, just for the purpose of what I'm talking about, if we stick in one there and we just set it to 50,500, we can see that price keeps reacting to the 50. So if we just make that a stronger color, if we just stick that like bright white, 4 pixels, just for the purpose of the example, not for any apparent reasons, but we can see, look, price comes up, reacts, price comes up, reacts, price comes up, it broke through, came back down to retest, broke up and came down. So what we can see here is on a smaller time frame, a double top. So price double topped here. If we get the brush tool, so we can see double top there. You actually can't see it because there's so many different contrasty bits, but you can kind of see 2 little circles in there. You probably, if I zoom in on it, you'll see it. So you can see the 2 little circles on it there, but we can bang them off it now. But yeah, these are probably thrown all my trend lines and everything, all different colors now. But look, I can fix all that. But yeah, right. So long term for Bitcoin, I'm still bullish. This is a relative pull off. This is a pullback, quite a considerable pullback. Truth be told, 10 days roughly. is how long it's been pulling back for. Made the highs and just has been collapsing since. It's not good for the crypto. Like, the next key level is going to be here. Like, price came and just smashed down through this resistance. So this was the resistance based off of, if we just throw it back to the hour just to give a little bit more context. So that resistance there, this zone here, so it came up, acted as resistance. Price broke down, came down to the 50k, and couldn't, and then just pulled back up out of it, hit that as resistance, retraced back to about 55, then drove its whole way back up to about 60, broke through 60, nearly got to 65. I don't have a 65 line made because the ATH is up there, so, and that's close enough to 65. So but yeah, price then smashed through the 60, no resistance at the 60. Like, if we zoom in, you'll see very, look, just smashed through, came down to it alright, look, bang. So people, I know on one of the Discord channels that I'm in, I saw a lot of people entered here off of this double bottom. So people saw this bullish engulfing candle here, and they entered off of that and targeted the 65, stopped. They all got stopped out, because obviously price instantly. So what people would have done was they entered. I think I even a bit of discussion with a few of the other people on the server. I think we all kind of determined this was probably the best SR kind of zone in this at around the 60k. So it's a 60k running back to about 59,250. So I just like having nice round numbers, because obviously price will react at nice round numbers more often than not. So 60. So we'll just leave it at that. So that's the kind of zone that we were kind of talking about, and obviously a couple of the lads did actually enter off of the bullish engulfing candle on the 1 hour time frame, so kind of a day trade. And sure, like, it's quite apparent if you entered here, logically entered off of the bullish engulfing, and you put your stops below. So stops below on a, like, sure, 2.5% on a so, like, what's the ATR? Just bang on the ATR there, so we'll see how volatile it was. So we're looking at 600 pips, 600 odd pips. So if we're looking at 600 odd pips, so we have a 1500. So volatility won't take us out. So obviously if we went to here, that's 1200. So we can't put a 600. Well, I suppose 600 pip would actually be a logical enough volatility range for this trade. So obviously some people, especially with a mean reverting strategy, having something like a 600 pips, so whatever complies with the ATR at the particular time. So if we see there 600, 620, 630 in this area was the volatility, so the average volatility over the last 14 days. And so we can see, or the 14 period, sorry, if we're on the daily chart. So I could set this thing to just show me the time indicator time frame. I can set that to be 1 day and only show me the daily ATR on all charts. So this would be the last 14 days. So I look at it at the particular time. So it's obviously going to show the day of today. So this is the 18th, so 17th into the 18th. So this was a late night trade, say, so the evening trade, and the ATR for that time was not applicable. It was showing it. There we go, about 2,800 for, that's for the day. So if we go and see what the previous, so this is the ATR for the previous 14 days. So where is it? Oh, it's 16. Here it is. So 1,800. But 1,800. So 1,800 is the average ATR. So you could be putting a way big one, but the fact that you're doing a kind of a day trade, it's not worth having it on that kind of big long time frame. I think having it, if you're day trading, having it on the same as charts. So especially if you forget to flick around, you change it when you go from chart to chart. You can have issues. Trust me. You can enter. Excuse me. You can enter a position and put a ridiculously big stop loss, and like you could have had, say, what was that, 2,800 pip stop loss. So if you go from 2,200, so you're going to 3,000 pips, or 3,000, $3,000. So it's $3,000 on one Bitcoin. So you could be, if you're on 0.1, you're talking $300 loss on practically a 1.5 hour. But if you throw this back to a respectable one of about an 1,800, so that's 1,800 on every one Bitcoin you have, or if you're trading 0.1 Bitcoins, that's only 180. quid, or a potential gain of 400. So knock the one off at that, or to knock the zero off. That's nearly 450. Excuse me, €450 profit. But right, we'll have a look at something else. Another pair, obviously, that I've been trading with the last considerable amount of time is Ethereum. Ethereum, very, very strong fundamentals. Actually, I found a really, really good news thing for cryptocurrencies. If you're big into trading your cryptos, Block Crypto, right? Blockcrypto.com. The block is what they call it, but theblockcrypto.com. I'll put it in the chat for anyone that wants to go. I could have just actually, you know what? Just in case I make a typo, I'll just copy it, just to be sure of it. And yeah, that should be all good to go. So if I click on that, all good. Yeah, it's a working link there, lads. Now, if you want to go and have a look at that, that's the Block Crypto. So it's good for all your crypto news. So look, you can just go down. Wyoming DAO law to go into effect in July after receiving final approval. They will prompt you with all this stuff. So if you wanted to go in here, it's open source, so anyone can write an article on it practically. So you just log in and you can put in articles. But obviously they'll be curated, whatever. If you see one here, these will all be curated ones, and look, you'll have to apply and whatever. It's not like with Wikipedia or anything like that, but you will. You know, Michael McSweeney, right? We'll just open up this Michael McSweeney. He could even be Irish, for all we know. He could be, but look, obviously he has a lot of articles written. So like he's writing articles, a couple of articles every day, two articles every day. Yeah, at least 2 articles every day. So like, there was where I caught the news about the Bitcoin selling off. So obviously I closed out a lot of my Bitcoin positions. Before that, I took in nice profits off of Bitcoin, just to show you now, just little 2 cents into my last, say, 6 months of trading with cryptos, especially. I could go back and check the account, but there's no need. I know it was in around 8,000 where I picked up my first batch of Bitcoin. So it was around just after my birthday. So my birthday is 24th of October. So it was just before Halloween I was getting in here, and it was just before that actually. We had a day where it dipped, and that's the day I bought. It was the day just back here, or maybe was it? Yeah, was it just before? Yeah, it was around 8,000. I think it was 8,960 was when I bought in. It was back a bit. What's down around here? Must have been earlier then. But anyway, it was back around then, and where I got my news about all that, and what I was basically studying, was the Block Crypto. The Block Crypto, in my opinion, is the best place to go for your crypto news, right? And when you see something so important come out for a currency or whatever that you're trading, you're gonna react, right? And like what I was saying, I got in around the 8,000 back around just before the massive surge came. Obviously there was the kind of COVID set off in early 2020, so the big COVID set off in March, and then as the year went on, started to pull back up 10, 20, pulling up into that kind of high range from these kind of highs back in the summer of 2019, so ever before COVID even was thinking about coming around. But yeah, I've basically been holding not a single position. I would have been absolutely fleeced in commissions, but holding positions from back around here the whole way to this, nearly a little bit of a sell off after, just shy of 40,000 off of the first crypto, for the first Bitcoin position, off of the dip then, and didn't close out all of it. Now that's the big thing, didn't close out of it completely, because if you do, like, you're not if you're still bullish on something that you're holding, you don't close out the whole of your initial investment, because fair enough, it doesn't go against you, you're not losing all your potential profits, but you are still holding. Like, you buy this for 2 cents, right? But when you sell it for €1, right? But you sell the whole thing for €1, none of your original investment still exists. So you take it and you sell 3/4 of it. So you cut it and you sell 3/4 of, but you hold some of the very, very original investment. So if you're holding one Bitcoin, holding 0.25 forever, like for longer term, you're going to be paying higher commissions on it, whatever. But it's something that when you buy it so cheap and it's worth so much, up around 60,000, there's big gains to be made there. And good crowd to go with now would be Binance. Binance are good. Crypto.com are good as well, because you can have the card, get serious benefits off a crypto card. I think for something as little as 3,500, I think you can have free Netflix and Spotify and stuff like that. If we just go to crypto.com, we can see crypto.com. So here we can see the cards. So choose your card, right? So you can go in here. So these are all the different ones. So dollars, I want to see this in euro because it would be more relevant to me. There we go. So we change that. So just for having an account at all, you can have it's just $0, right? You can have the Midnight Blue crypto card for just if you have a crypto.com account and you've just thrown some money into it, right? At least if you're holding crypto, I'd say at least put at least about €500 into it, because it's just compounding. If you know anything about maths and compounding, it's hard to get 350 anywhere. And just for anyone starting out, my advice to you would be, instead of putting €100, I can afford to put 100 into a trading account. That's okay. You can go and put your 100 in. You'll be a hell of a long time getting that 100 up to anything, right? If we just do compound interest calculator, right? Just a quick little compound interest calculator. I have a good one on my phone, but I won't be able to get that up on the screen easy. So the initial investment, right? If you put 100 into your trading account, right, and you're not putting anything in every month, that's the annual. I want to put this compound frequency is monthly frequency. So so if we go for monthly contribution, don't want one. If we put it over 3 years, right, an estimated interest rate, so over the year, look, I assume, since I'm going to change this to monthly, if I put in, say a good, if you got good, you could be pulling an 8 to 12% return, and variance range. So right, so say we put in 8, and we'd say 2% up above and below, right? If we calculate, this should be let's see now. No, because that is 3 years estimated interest rate, so it has to be that over the year. So we put in a rough figure for that by 12. I'll just do a quick little 8. Why does this not work? Yeah, so yeah, we could be sure like it easy. If you were good now, you'd return. Yeah, so look, we'll just put 90, right? We'll put 90% over the year. If you were good now, you could be packing away a nice few quid, right? In 3 years on 100 quid, if you were day trading now, and this is a day trading prediction, this isn't concrete by any means, and I'm not saying this is what will happen you if you invest 100 quid. In 3 years, you could have that up to €1,500 nearly, right? But the whole thing about it is, if we show this over 5 years, right, 5 years, it's all about your initial investment. You'll see this jump. You'll see this jump now when it calculates. I don't actually like this page. This is, look, you're showing about $8,000, right? Just getting close to $8,000. But if we get a better one, this is the one I've used before. Euro, right? €100 at the start. Interest rate monthly of, say we're pulling an 8% monthly return over 3 years, right? Compound interval monthly. No deposits, and say you're taking I don't know, you're taking a quarterly, no, just pretend you're not taking anything, right? And yeah, right, now we calculate that. So your €100 at 8% return every month for 3 years, you would have €1,600, right, on with 60 or 1,500 profit, pure profit, right? So obviously your effective annual rate, right, which is high. That is high. That's a really, really good thing. If you were hitting 5%, right? But look, I'll talk in more realistic figures, to be honest. because when someone starts off, they're definitely not going to be pulling 8% every month, and that's every month. You will have to be hitting that target every month, and you will have your bad months. You will have a 3%, you'll have a negative month. Don't be afraid of that. That'll only make you stronger. And you see that now. I took 5%. I took 8 down to 5 monthly over 3 years, and now you're only at 500 quid, right? That's what kind of might scare you off, right? But that €100, as I said, you may as well not even go with €100 into it. Invest €100 into a mentor. You might get a mentor you might get a mentor for a couple of months for €100, and you'd set you on the right track, right? I offer services now at a very, very, very good rate. So if you want to get in contact with me and we can organise something, if you're living local, we can set up something. If not, we can set up some. Well, for the time being, it'll be over Zoom. But as the country starts to open up and whatever, we could organise something locally to sort something out. But to pull 5% monthly average is definitely within the realms of possibility for anyone. That, and I nearly say that could be true nearly across the board, right? But if you take, say, I'll give you an example, right? And I'm not going into the specific figures, but if you just take John, right? John opens a trading account with 2,500, right? If you worked a summer, you'd have that kind of money, right? And you'd still be able to save a few quid. Like, you can work with less than minimum wage for the whole summer, and you'd have probably about maybe €1,000 over that. Say to having savings or checking cash, and you could invest that. Say knock about 2,000, right? And if you're pulling 5% on a €2,000 account, so remember the number 580, right? For the 3 years. So in 3 years' time, on 2,000 at 5%, we're gonna have, so instead of it being 500 on €100, so we're after going, up to 2,000. So we're after going 2,000%. Calculate that. 12 grand, right? So we have taken 2,000, right? And we have, we've obviously 6 times that nearly, right? It's 11,500, and a complete profit of 9 grand, right? €9,585, or yeah, it's close to €85. So in 1 year, your your balance has gone from 2,000 to 3,500, 3,600. Right, in a year. That's on a €2,000 investment, right? Take someone with maybe that has been saving up over, say, taking their account, right, and they started off with 1,000, right, but they're very, very disciplined, and they commit to deposit. They're working at weekends, right, and they're able to deposit €50 a month, right? It's not. That's just about less than a week's wages, right? If you're working weekends, right? And we deposit at the beginning of every month, right? We calculate that, right? So on €1,000, and we're throwing in 50 quid every week or every month. Sorry, we'd have €1,000 just shy of the figure that we were looking at €2,000 initial investment, right? This is a compound interest calculator, as in for bank, right? So if you put in, if you have €1,000 in your account and you have an interest rate, a yearly interest rate of 0.5%, which is what they give you in the bank, and a little plus, a little extra as to why banks are complete scammers. Inflation on average is about 3%, right? So the value of money devalues by about 3. The whole economy inflates, so it actually makes your money worth less. So they can safely give you 0.5% onto your account. I nearly spilled my glass of water. They can safely give you that interest that you think you're making money on, but in actual fact, your money has been worth less, and you're actually losing money by leaving it sit in the bank. So that's one little bit of information. But what you need to understand is that obviously with trading, you're not going to be able to pull these kind of profits consistently, right? And it was good that other website had that kind of range, right? But say like if you said 5% above, 5% below. So if we take this, right, £1,000, right, it's a safe amount to invest. But I'm not saying it's safe by any means, but you can have a monthly return of that means 8% of your account. So if you have €1,000 account, you're going to be increasing it by €80. Is it 80? So if 10% is 100, yeah, so it's €80 a month. So €80 on the first month, and then it's 80 something on 1,080, and it'll be growing like that because it's nearly 10% you're increasing. But if you do that figure, right, at the 8% that we were, or the 5% was that we were saying, so €50 on the first month you need to pull, right? So basically what we're talking about is we will be over the 3 years. So if we say take this figure, so the 10,800, right, so 10, and we multiply that by 98%, right, 10,584 is what you would be on the lower end of the spectrum if you had a couple of bad months, or maybe take it 10% just to be a little bit more realistic. So 10,800, multiply that by 0.9. I have to make a mess of this now. So 10,800. I should be doing this on screen, but it's just I'm used to using this calculator. So by 0.90. So it's about 9,700 if you take a kind of a 10%, which allows for a couple of bad weeks, a good few bad weeks and whatever in the month. But yeah, like that's kind of goes over the idea. But back to this thing, right? If you have, it's kind of, as I explained, it's hard to grow €350 into anything, right? 3,500 is definitely something worth thinking about. If you have a few quids put away, you could put in this, and overnight you could turn into this or this. It could, not saying it will, it could. That's how crypto works. Bitcoin, right? Bitcoin here could go from here at 350. You could have 350, so you could have, well, obviously with leverage and whatever, you'd be able to own Bitcoin, but you actually have to transfer your money for the Bitcoin. So at the current price, where is Bitcoin? Bitcoin is here. So at the current price, for Bitcoin, 49,661. So 49,661 0.29, right? 49661.29 multiplied by 0.1. You need just under 5,000 to buy 0.1 Bitcoin, which is the smallest lot size you can possibly buy with Bitcoin, right? I think if you open a trade position here, I don't know if this is a paper trading thing, but if you go for a market order at the moment and you try to put in anything less than you can on this because it's only a paper trading account, but the minimum you can buy on Bitcoin is 0.1, which we just calculated out to be 4966.129. So 4966.13 is the smallest amount you can transfer to get Bitcoin, basically, on a kind of a retail trading level. Obviously with other different brokers and whatever, you might be able to buy Bitcoin in smaller amounts, but and paying for Bitcoin and stuff, you can pay in smaller amounts and whatever. But like Elon Musk selling a Tesla for 1.5 Bitcoin and all that kind of stuff, but that's risky because today Bitcoin might be 1.5 Bitcoin might be worth 70,000, but tomorrow it might be 60,000. So the price, obviously, prices can fluctuate, whatever. And if you go into a car dealer, like if you go into Volkswagen in town and they have a car there for 29,950, right, and you go back the next week, that car is most likely going to be 29,950, and the week after it might be 29,950, and 29,950 the month after the month, and then 2 months and 3 months that might be 29,950 for all that time. But with Bitcoin, it's because it is more of a stable economy. The economy behind that car is strong, so the euro that car is priced in isn't flipping around with huge moves and big volatile spikes throughout the week or throughout the months. So, but with Bitcoin, pricing a car with Bitcoin, that price will be constantly flip-flopping around, because obviously you can still buy a Tesla Model X with dollars, but it was advertised. I don't know if you can yet, but you can buy a Tesla Model X for 1.5 bitcoins, which at the moment would be what do we got, a 49.5, just call it 49,577, and just buy 1.5, so 75,000 for a Tesla Model X at the moment. And I think that's bog. You're getting a bog Tesla Model X. You're not getting all the bells and whistles on it. But yeah, so look, we'll shut up the Bitcoin for the moment, and we'll go and look at some of the US, or we'll start with the USD pairs, a couple of them, and see what way things are going from there. So I've completely wiped my charts and cleaned things up. As you might have noticed, I'm using the dark mode again. I started with the dark mode, went to light mode. I just think it's so, ever since I haven't been getting headaches half as much since I turned my charts to dark theme. Oh my god, they are just horrible. Oh, please tell me I saved my... I did. Okay, I like these with the white kind of border around them. They look nice. They kind of pop off the screen nicely. I turned off the grid. I did actually have the watermark, but I think it kind of covers the chart a bit too much, and I don't like it. So that is staying off. But yeah, right, so we'll knock this. So this is daily. So right, straight off the bat, daily, right? So we can see obviously here, so we have in last week, right, we can see double doji coming here, right? So obviously coming, so as we know, huge bull run for so since the COVID fall off, obviously. So huge bull run. 2021, as we've discussed before, has been a slouch, right? But if we knock this down to the 4 hour, just for example, we can see huge pickups, right? So we can see obviously broke the 20, so we broke back through the 20 again, so the 120 euro to the dollar. So big news. So we can obviously see simple technical analysis here. So look at that moving average, it's lovely. So we can see on if we actually take out the trend lines again, these are going to come in a dirty white color now again. So right, obvious technical analysis, right? So we can clearly see, actually we won't draw in lines because we have our beautiful purple zones that we know and love, purple on a small TF. So here we go, support and resistance zone, right? Support and resistance zone, we've seen these before. So we know exactly, we're experts on support and resistance zones now. So obviously price came up, rejected, price came up, rejected, price blew up through it, came down, retested, and it's going up, right? Where's price going? We're at a resistance here. So obviously we can see resistance coming from, there'll be resistance coming from this kind of area here. Obviously we can see it already starting to pick up. All I'm using is a trend line, holding shift, and we can clearly see huge resistance off of this area. Look, price came down, boom, slapped up through it, right? So we have obviously resistance in this zone here as well. So price came down, boom, touched off, it came down, obviously finding resistance in this area. So this is technically more of a zone than it is a level, but we can clearly see there is something happening in this area here, but it's kind of a little bit far back from my liking, so it's not relevant enough for me. But we can see that this zone here, right, so we can see price obviously is coming down in these kind of it's dipping, right, it's catching little dips, but price coming right down to here, finding resistance. So if we just draw a box off of this here, so it's quite a wide box, so I'd actually rather that in a green color, because it's just I just find it's gonna it just distinguishes from these smaller time frame ones, because this is over a whole month and a half, whereas this one's only a couple of days. This is only about 3 weeks. So I just think that, well, obviously it's not that big of a zone, but I just drew it out here because future this could come back down. That's what I'm kind of expecting to happen, because we have been rallying mad with the last while. So like we can clearly see this trend line is actually driving me nuts. I'll have to fix it. Put it on the blue, back into 2 pixels. Yeah, that's much better. And we'll actually put it on a dash, an opaque line, because it kind of just it doesn't take so much from the chart. So we can obviously see, look, uptrend in here, and we could be, look, we're coming to a lot of resistance here. So we can obviously see the resistance in this zone. So we can see resistance here. So resistance here, watch for that, but pull that resistance over, and it's overlapping with this kind of SR flip in this kind of region, right? So we can obviously see there's resistance off of these kind of these peaks. So there's resistance, but we're finding support. So we're kind of have that same thing that we saw in Bitcoin, right? But it is after happening already. So we can kind of see it's not a perfect example, but we can see obviously there is a triangle kind of forming here. So we can clearly see that there's something happening here, and obviously we did see that kind of flip-flopping around. So obviously price came up, relaxed, price came up, but made a higher high, made a high, or higher low, then made a high, but came back down, made a higher low, because it actually is technically, well, it kind of made a low, so it's kind of high-low, but it did break out again. So obviously, I'm bad at drawing them path lines. But yeah, you can kind of see what I'm kind of getting at here. So the price is kind of flipping around in here, but I think we're going to reject. I think we're going to do something similar to here. We're going to reject off it, but I think we're going to come back down. Whether we come back down to meet this resistance. So if we draw this back in again, just here. So if we come back in off of this resistance, so just set this to a just back to a white line, because it was actually nice, easy to see. Actually, we'll just use a little rectangle. So if we just mark this, set that to the right, I think you can just click this, purple TF. So we can see, look, there's obviously resistance in this coming off of this zone here. So what we could see is price reject. So what I mean by that is that with the path, so price comes up, comes down, comes up, comes down, and price comes up again and breaks through. Obviously it broke through, but it'll only come down to this zone, and it might flick around here for a few days or whatever, but then eventually break through and just fly off. It could just bang the whole way up. Not necessarily that much, but we just have to then, when we establish that could be what's going to happen, we could be targeting here. So we could be saying, okay, nice. So we just didn't mean that now. So we can see, okay, these peaks. So we could be targeting up here long term. So we could be saying, say here maybe. We'll have a look. Rectangle, and we'll do small TF. So we could be saying, actually this one is very, very considerable. That's a considerable SR zone. So this one, yeah, I'd be happy with that. Put targets in that kind of semi long term. Maybe the end of April might be a little bit soon. Maybe after the bank holiday, could be looking at something like that. It's just after the May bank holiday, so we could be. I know you probably can't see most of this, but May bank holiday is coming next weekend. So we could be saying, yeah, the week, we could see this for the week, and then maybe into the middle of May. So we could be seeing this kind of flickering, going around for a little while. But yeah, I'm feeling bullish. I think this bull run is going to continue. We still haven't gotten to these highs over here, in this kind of region over here. We're not quite getting there yet. We're quite a ways off it, but yeah, I'd say long term, so kind of summer zones, I'd be saying around here. Those would be my kind of summer targets. See, look, this even looks very, very squashed. I think this could be, a this week kind of move. I'd say we could be flicking around. We could be flicking around in this whole zone for the week, but the fact we're after breaking out, I think we are finding quite a little bit of resistance up at the top of that band. And then this support and resistance flip line across here, there's a considerable amount of it coming from there as well. So yeah, I'd say, yeah, definitely we could be looking at some good days ahead, to say the least, in terms of investing. Because look, we can do an SR flip strategy, we can do a mean reversion strategy off of this. You could just do, look, simple science here. So we could say, okay, came up to here, came down to here. So right, we go short off of this, right? Go short, stops above. So say we're wicking to 12 pips above, so we just put 13, right? Then we take our next position, so we can actually copy and paste this one, and we can go off of the next one, right? So there's our next position, right? But then when we get to the end, so when price ranges, you do SR flip. So we know it's wicking above, so we can just set our profits straight there, and we can say, oh, we're wicking slightly below, so we might put it 10 or 12 pips below, and we can do it like that, and we can be just constantly SR flipping in it. And when are we going to lose our profit? Well, if it breaks above, we're okay, because we're going to take a position, only we're not going to take full profit, because we'll be taking a position here, taking our profits here, it stops below, right? Like that. That's the position we're going to take. But price goes higher than we expected. Price did double the move, so we could be catching 60 pips rather than 30. But look, it's the nature of the game. Sometimes, but that could obviously go in the opposite direction. We could be entering it long here, but we could actually lose those 14 pips off of this move. So if this move didn't actually go up to here, and price came to here and just broke back down and came back down to the zone down here, well, obviously we would have taken our profit from it going up to here. But on the short coming down to take, and we would have been taking our profit down here. So if we just get rid of this path line, right? So my hypothetical situation that I'm on about is if price came up to here, came down, came back up, came down, came back up, but price came back down, but maybe did a small retracement but kept going, we would have taken our profit on the bearish move, right? But we would have went long off of this, because obviously we have our entry reason off of the support line, and we have our stops to here, but price broke down below it, so we're going to get stopped out. So that's if price doesn't go the way we anticipate it to go. So we could do, so just a little insight into what I'm probably going to do, especially tomorrow, Monday, from a scalping point of view, is I'm going to do probably a mean reversion, seeing how, look, I have to analyze price action when the market opens, but we could see SR flipping around in this zone for the whole of tomorrow practically, and the days after. So we could be doing so this is the 4 hour time frame, so like we'll have one candle here for 4 hours, and then like we'll have a day, another day, another day, another day. So this is kind of measuring the extent of our week next week. So there's close of business on Friday next week. So we have obviously a good few days of price action to go, but I could see something like this happening during the week. Monday, Tuesday, Wednesday, Thursday, Friday, we'll be doing that. That's my prediction. Unless price straight away, we'll have to go read the news. Obviously we have a new 20 news, any reds. Still not able to scroll down through them. That's absolutely disgraceful. So you can't go through the news. See, look, there's 1, 2, 3, 4, 5, 6, 7, 8. We can see 8 of them, and there's 20 of them available. So we can't actually see them all. See? Watch. It won't show them all. It only cuts them off. It's the most annoying thing about TradingView. You'll have to find somewhere else to get your news. And look, we have a red one there. It'll show the two different things. But you see, in this pair, Euro USD, right? Just put a little note here. No, we won't need it. Euro USD, when euro is good, it goes up. When euro is bad, it goes down. When dollar is good, it goes down. When dollar is good, or when dollar is bad, the price will go up, right? Is it? When euro is good and it's in the base currency, it'll go up. And when euro is bad in the base, it'll come down, right? If dollar's in the base, it'll go up if it's good, and if dollar's bad in the base, the thing will go down. So obviously these $3 pairs will all went down. Well, obviously this one only went down by a bit, but I actually think, yeah, that was after pulling back up, so it went to kind of break even, right? But these ones were all still down from the moves, right? Weak dollar. If we look at the index, the Dixie, obviously look, fall off on the Dixie as well. So obviously there is, look, and this is one thing to keep in mind for the week. Just saying, the reason I'm feeling bullish is that double top. I'm thinking this is coming down further. We're seeing, look, resistance, head and shoulders here. So I'm thinking neckline targets. And the Dixie is the index for the US dollar. So that's kind of where I'm looking at. Neckline, just above the neckline, these kind of wicky bits coming up around, kind of zoning. I might be kind of actually zoning this kind of area. So if price comes down into, well, that's obviously the index of the dollar. So yeah, so like and obviously as we can see, this is still trending hard down the way. If we stick a 20, if I go in and get me MAs, and I put a 20 on it, we'll see that 20 is most likely leveling out, is my prediction, but I don't think it's necessarily going to be on its way back up again. So we'll stick it orange on 2 points, and we'll just see how it shows. So yeah, look, it's leveling out. It picked up, but it's obviously on its way back down again. That's going to be much more volatile than any of the other simple moving averages. We can see that this is definitely still in a bear. This is still bearish. This is the dollar index, the Dixie. EXY is the euro. BXY is the pound. SXY is the Swiss franc. Yen, Canadian dollar, Aussie dollar, and Zealand dollar. There, and look, it's unbelievable how similar the Aussie and the Zealand look. Just flicking from one to the other. It's ridiculous. If you're not trading Aussie and Kiwi with each other, if you're trading Forex and you're not trading Aussie and Kiwi together, just forget about it. They always move the same way. Especially the Zealand dollar, and so if we have the Aussie and the Zealand, right? Aussie and Zealand against the dollar. Just look at the charts. It's ridiculous. They're so correlated. One moves, the other moves. One moves, the other moves. You can make a lot of money just off of this strategy. Whenever you short one, you short the other. Whenever you long one, you long the other. You can make so much money off of an Aussie dollar, Zealand dollar pair strategy. You're not pairing them against each other. You're pairing them with each other. So obviously, if you make a wrong call, you're double wrong. But if you make a good call, you're double right. So you, instead of losing 10 pips, you're losing 20. Instead of gaining 40, you're gaining 80. You're making 80 pips. That's a good day. It's a very, very good day. You make 80 pips in a day, you take it. you take it handy. You toga buggy for the rest of the day. But yeah, that Aussie dollar, Aussie dollar, Zealand dollar strategy is very, very, very powerful. I'll actually bring out a video on it because it's one that's very, very good has been very, very good to me in recent times. Look, obviously you're going to have times like this. Look, one is going to work. So you might short off of the 26th of January, right? Short off of the 26th of January. Obviously it did fall, but it didn't go into as much turmoil as the Aussie did. So obviously you're going to have times where things don't always work out, but you can see just by overlaying the two charts, look at how similar they are. Like, turn off all my indicators. So leave the volume on. Well, no, just knock them all off. Look at the price. Price. If we go up here, this one, and if we go Aussie dollar, US dollar / NZD USD, right? And just do all, and I think if you go enter, there we go. That is the Aussie dollar divided by the US dollar, the Zealand dollar. So it's the average of the two. You can see that didn't change anything. That still is the same chart, right? So if we actually do a side by side, sorry, I can't see where the little box is. So we can see the box here. So if we put two charts side by side, right, and we take if we do a 2 and a like this, right? If we put the Zealand divided, or the Aussie divided by the Zealand right here on this chart, and if we take over here and we just get the Aussie, and if we just get the Zealand, right, and we put this on 4 hour, 4 hour, and 4 hour, right, we can see, right, obviously you can't trade what I see on the left here, but we can use this to check for divergence, right? So divergence is when price is saying it's going one way, but it actually goes the other. Practically, it's kind of the strength of the currency is shown one way, but it actually goes the other way, and it's called a divergence. If you want to look at it, there's plenty of videos on YouTube about it. I don't particularly trade divergence. A lot of people do a head and shoulder divergence strategy because obviously if a head and shoulders formation happens, on a divergence, it's going to go the opposite way to the way the head and shoulders is going to say. But that's not always, like, look at this, right? Typical example of a head and shoulders divergence, right? So obviously I haven't tested for divergence, but you can clearly see a head and shoulders pattern here. So head and shoulders, which is a reversal indicator. So head and shoulders is destined for the downside, so that the right shoulder is going to go down. But what happened? Right shoulder didn't go down. Right shoulder pulled back up. Head and shoulder. There was obviously divergence in the RSI or the MACD or whatever. Right? I know I said I didn't like the MACD. I'm not against it. I just don't like using it. You can spot a divergence on the MACD like that. But divergence, if you're using divergence strategy and an RSI strategy on the wrong pair, won't work. Like if you use a divergent strategy on GJ, it will never work. It's way too volatile. If you look at GJ, where's my GJ? If you look at GJ is, look at this, way too volatile. Like you can see, obviously there's a good bit of volatility, but look, everything is a peak, down, peak, down, peak, down. This is and then down and consolidate. Oh, we pick up. It's all big move consolidation, big move consolidation, big move consolidation, big move consolidation. This is big move, big move, big move, big move. There's no consolidating with GJ, and that's why, or GJ I mean British pound, Japanese yen. So with volatile or illiquid pairs, so where there's not a lot of liquidity, where things can move very, very volatilely, and the reason, well, obviously a lot of the forex markets and any of the majors are very liquid. It's more with stocks. Illiquid stocks are very, very, you might have 5 or 6 orders going in at any one time. Obviously it's going to be very, very slow moving, but with it's not really, it follows the same kind of thought process of an illiquid stock, but it's just because there's actually GJ is probably the most famous one for scalpers. So scalpers in and out, in and out, in out, like you can catch a lot. So if we just open a 5 minute, I didn't mean that, there we go, 5 minute chart on GJ. Look at how volatile it is. Look, there's 150, so there's 150 pips, there's a 50 pip profit on a 5 minute chart. That is ridiculous. You can spot something here, catch 50 pips like that, right? 2 pip commission, no problem. 2.5 pip, that's all I'm charged on GJ. 2.5 pips, it's not bad. Your USD, 0.9 pips, 9 points is all I'm charged on a euro dollar trade. That is ridiculous. Get with Avatrade. If you're not with Avatrade, go to them. I'm not affiliated with Avatrade. They're very good. Spreads are very, very minute. You look at other crowds. Oh, pay small commission. Always pay. Don't get a broker that doesn't offer a commission. If they don't want a commission off you, you will get shite spreads. If you're not paying for your trades, in a commission, they're charging you for the spread. The spread is the distance between the bid and the ask, and that's what you're charged on your position. You buy at the ask, and you're going to get a bad spread. You could have a 5 pip spread, 5, 7 pip, 8 pip spread. You may as well not take the trade. Unless you're taking a swing position. 8 pips on a swing position at 200 pips isn't going to be, it's obviously 8 pips on 10 trades is 80 pips. So, that's definitely, that's 100 pips. If you're talking about, if you're talking 100 pip profit on a 2% on a €5,000 account, 100 pips is €1,000. Think about it that way. So just beware of your commissions. Pay your commissions, and you will get good spreads, because your commissions, if you look at your broker, you're not going to be getting front run. You're not going to be sold to NTF firms, and you'll be getting really, really bad spreads. So you pay a small commission, and that's that. You're always, look, if you're paying a commission, you will have a spread, but you're going to have spreads like 0.9. All I pay is 0.9 pips of a spread. So you can see that little 5, right? That little 5, right? Actually, I'll show you on the actual pair that it's to do with. That's not on across all of them now, but they actually offer a very good one on GJ. 2.5 is low for GJ, which is very, very volatile. The volatility will, and the popularity of it will change the effective pip spread on it. But I'm talking about, like, this price is at 20.96.8, right? That 8. If that was 9, so the difference. So I'll just bring up the calculator, right? So we can see the calculator on the screen. If we take 20, so 1.20968, right? That number, the 8 on the end, is the pips. The pipettes are the points, right? So this is 6 pips, right? We have 6 pips, 96 pips, and then 2096 pips. So that's pips, 10 pips, 100 pips, 1,000 pips, and then 10,000 pips, right? But if it never moves that much, like, obviously that would mean that €1 is equal to $2, and that doesn't make sense. But that's $1.20. So, and when price rose from 1.17, to 1.20, that's 3, that's a, you know, if we're looking at 0.2.17 up 300 pips, so it's coming from that up to, well, this is at 21 practically, so we're talking 400 pips up, and we would have been charged 0.9. So if we go from this number, right, if we take we'll just take it at 1.21, right, we're practically at 1.21, so if we go 1.21, right, minus 1.17, right, which is 0.4, so that's 400 pips, right, it doesn't show it, but that's 400 pips, 0.4 is 400 pips, and we go minus 0.00009. That is the cost of per the pip spread is per unit, so per unit is that, so that's our profit, right? So we take our pips, multiply it by our lot size, so it's a rough kind of a calculation, so multiply it by our lot size, so we're taking could be 200 euro on that trade. What's wrong with that? Absolutely nothing wrong with that. So, like, multiply by your lot size and that's your profit. So I put that in on 5 mini lots, which would be on a fairly moderately sized account. You'd be trading 50,000 units currency. So on a leverage basis, so divide that by 30. You're talking about you'd have to front 1,600 on that particular trade. So that's your margin. So the margin is you'd actually have to put up 1,660 euro as margin, and then they'll give you the rest to get you to 50k, right? So realistically, and that would be on, I don't margin more on any position ever. I won't margin more than 20%. So if we multiply that by 5, on that account you would want to have 8,333 euro in it to open that position on my rules. Some people do a 10%. So what do we say? It was we had 8. Just divide that by 5. So about the 1666. If we multiply that by 10, which is if we were working off a 10%, if that was 10% for account, that would be 16,000 euro 666, because multiplied by 10 obviously. But yeah, but that's not any figures to do with me. I trade with a 2% risk, right? I find 2% risk is pretty good for any of my positions. I actually, as my account has been growing over time, I'm starting to feel maybe I might knock it back to 1%, because the profits I'm making, I don't need to be taking as much risk on the profits that I'm making. Obviously, if I'm risking less, I'm going to be making less on each position. But if I knock it back to 1%, I'm making 100% of what I was making on a 2% risk 6 months ago, now on a 1% risk. So I'm risking half the amount. So if I risk 1% of my account, I have the potential to take that 1% by a 4% increase on my account. Now on a 1 to 4 trade, but if I was taking 2, I'd be only, you know, if I was taking 2%, I'd be risking maybe up to, you know, that's the kind of, it's a kind of a understanding all this stuff yourself is the biggest factor to overcome. But look, lads, so look, obviously I explained that the dollar is looking weak for the week. So what does that mean? So we just get the chart back up. Dollar's looking double top on the dollar. So if we just, so double top here. So what's that mean? Double top, price is coming down. I think price is coming down hard. I think that, well, provided obviously we don't respect this support. Once we don't actually respect this support, and it actually just on further inspection looks like it is kind of reacting to, but I think this is gonna pull back. I think this is a little bit loose of a that's a little bit tight of a support and resistance. But yeah, I'm kind of thinking that we'll be okay. So look, if price respects off of this, I will completely flip around my judgment. So these are all going green, these are going red. That's my prediction for the week. If this respects, these are going red, these are going green. So if we have so we just quickly open up a whiteboard just quickly. I don't have the thing plugged in, but I think I'll be able to do it just with my mouse. That's from the video the other day. If you haven't seen it, definitely worth having a look at. But if we can't actually draw on the screen because I don't have the thing plugged in and I don't have it set up, so we'll just forget about that for just for just a second. Actually, I think if we screenshot this, I think I'll be able to draw on it. So if we take this, right, so if we look at the green, right, so if we look at these over here, if we have the euro slash USD, right, obviously they don't have the slash in it, but is there an undo there? I don't have a clue what I'm after pressing. That's crop. No, I don't have that's a ruler. Turn off the ruler. So now back to me. That's not actually level now. I shouldn't have touched it at all. No, stay there. Right, so Euro USD, right? If this breaks down further, right, I'll actually change it to red just for the sake of the explanation. If this breaks down further, these ones, right? Sorry, it's nothing to do with the euro. Where the dollar is quoted, they're sorry, they're going up, right? These will be green, right? These ones here will be green, right? Provided there's no contrary, news comes out in the relative currency on the left, in the quote, in the base currencies. So we're in dollar quoted currencies. I went over this before in the currency correlation video. If you don't understand it, go and look at that video. But I went over the way currencies correlate with each other. So if we have a euro, if we have an XUSD, right, XUSD, if this goes down, right, and the USD is in the other column and nothing else happens in the other currency, we go up, right? And if we have USD X, right, like that, right, and we see this pull, I'm just trying to make sure I get this right, and this pulls down, price is going down, right? So these ones here, if there's a pullback on the Dixie, right, if this pulls down, these go green, right, provided there's no contrary news in the relevant, in the euro, so in Europe, in England, Australia or New Zealand, right, provided there's no contrary news in those countries, price will react accordingly, right? If the Dixie drops, these will go up, these will go down. But if we have XUSD and this respects and goes to the upside, what we're going to see in this case for all these ones, it'll all be red, and if we see a USD X, it'll be going up because we're seeing strength. So strength on the Dixie is strength when you see USD first means it's going up, right? When we see USD, right, in these, this is going up. I know I'm drawing in red, so it might be a little bit confusing. I know with dyslexia and stuff like that, red can be a little bit intrusive visually, you know, when you see red marks and stuff on pages. With all that, I don't have dyslexia, but I know if someone watching is dyslexic, I'll just have a little bit of respect for you and I'll do these in blue. But if this comes down and rejects back up, we will see the USDs go up. These will be green and these will be red, provided there's no contrary news in other countries. But if we see this break down and continue to the downside, these will be green and these will be red, provided there's no contrary news in the relevant country, right? So in Germany, there's a huge news on the Pfizer vaccine, right? The Euro USD, well, that will actually affect practically everything, because that's going to completely, you know, if they say Pfizer, we can do, we have 100 million new vaccines coming this week, been distributed equally around, right? Grand. Well, 100 million wouldn't be a huge amount on 7 billion people, but just saying, as an example. But that would affect the euro, right? That would affect the pound, because they'd obviously be looking for vaccine, and all the relative. So that's kind of news that would be specific for it. But if, say, Volkswagen comes out and say, I don't know, Volkswagen come around and say there's we're releasing a new ID7 and it's going to be for €20,000 and it's going to be the best car that's ever made, and that would do something to the euro. It would strengthen the euro. So if the dollar goes strong, so if the dollar, so here's the euro chart. So there's the euro and the dollar, right? Euro chart goes up, dollar chart goes up, price isn't going to go up or down. It's not going to do either, because it's just going to carry on. If it was in an uptrend, it's going to carry on in the uptrend, but there won't be something like that happen. It's not going to do a move like that, because both things are acting. So it's obvious. It would consolidate more than anything, right? But if one of them goes contrary to the other, if the dollar weakens and the euro strengthens, the euro pair, so the euro dollar, is going to go, because there's weakness. The dollar is restricting the euro, right? So and then if we go for the dollar against the CHF, and the dollar CHF in this situation, we will see. Or obviously, if that was the Swiss, whatever. But I think I've explained it. I'm kind of after drawing it kind of wrong there. But I hope you understand what I'm talking about there, because that's a very, very relevant strategy, and it's worked for me for years. So I can't stray too far from it. But look, lads, I think we're going to wrap up things there. I hope everyone enjoyed. I definitely loads and loads of really, really valuable information put out in this session. Stuff that you can easily make a strategy out of. Absolutely, there's no limit to the amount of value you can get out of the information in this. You can start trading profitably with everything, with not everything, but the majority of things that I've said in this video. Definitely, you can start developing a strategy from. I'm not saying you will be profitable, but a lot of the stuff that I've said now has been very, very profitable for me. In recent times, though, the Dixie has been leading the pairs, so that's always good. So we can obviously look at the Dixie, right? Dollar weakness, right, over March, and what do we see on the euro? Huge throws to the upside, right? Just it's all this stuff that you get, that you notice over time, right? But look, lads, we'll wrap it up there, because I think we're kind of dragging on a little bit too long now. Yeah, we're 8:15 now. So look, lads, thanks very much for watching this, and we'll be back together on actually no, we won't be here next week. Next week's the bank holiday, so we're gonna take it easy again next week for the bank holiday. And yeah, sure, look, hopefully I'll see you then. What date? We'll put a date on it just to be sure. So it won't be the 2nd, so it's going to be the 9th. So we'll meet again on the 9th, Sunday the 9th of May. The 9th of May, imagine it. For to resume our sessions then. So look, lads, thanks very much for watching, and I'll see you all soon. Just make sure we get this off now. Yeah, right. I'll see you soon.